Welcome to this week's live ASX strategy session. Great to have you with me. Thanks for joining me. I think we've got a lot of interesting things to have a look at today, and we'll get into the ASX 200 in a moment. First of all, though, everything today, of course, is general commentary only. There's no personal advice given. So, having mentioned that, I think we should get into that first chart. So, ASX 200. The investor focus really appears to be around buying dips, and that's pretty much been the case all year. Like, we just look at these previous occasions, the ASX 200's come back to the 50-day moving average. I've got the 50 and the 100-day moving averages on the screen, and each time we've come back, we've gotten a nice rebound off that. And this we're really seeing that buying interest underpin the market. What I think's been going on is I think people have just been generally underweight stocks over the last 4 months, and it's easy to understand why people have been underweight stocks, just because of all the negativity that there's been around the economy and around the markets generally. I think what we've been seeing is probably a general rotation back into stocks, and we're getting that classic buy the dip. As the market comes back, people want to buy the dip. In a bear market, people want to sell the rally. In a bullish phase, they want to buy the dip. And as I've been talking about going back to when we had this false break low, we had the rally back up, got back above the moving averages. I've been saying that I'm bullish towards the market. I've been saying that I'm long the market. And having said that, though, I never want to be blindly bullish. Not just a case of going, I'm bullish, I'm blind to everything else. I'm always looking for the risk, always trying to manage it. And I'll show you a risk that I see for the ASX 200. What I want to do, I want to put on an indicator. I'm going to put on the RSI, the relative strength indicator. And the obvious thing you can see here, if you know your way around some of these charting indicators, it's the divergences going on. So the ASX 200 has made a series of new highs. So we've got 3 highs. And then we look down here at the RSI, and that's not the case. Each time the market's made a new high, the RSI has been lower. So we call that bearish or negative divergence. And I don't think this is pointing to like some type of a major top, and there's a big bear market on the horizon. I don't think that's what it's suggesting. What I think's going on, I think it just highlights that there's a risk of a pause in the trend and for some consolidation, because I'm still mindful that this is a 16% rally off the low, which hasn't really been consolidated. So the fact that we're seeing this divergence, it could be a sign of a market which is just getting a little bit tired and needs to pause. And similar things could be said for what we're seeing in the US market. And now, an important thing to note about divergence, and I say this every time I talk about the RSI and divergence, it's that it doesn't play out every time. It's not this magical indicator which always can tell us that there's a top or a bottom forming. I think it's just a risk factor. It's something to be aware of, and it's something to say, look, just a reminder that we always need to manage risk. I'm certainly not looking at this and saying, look, I've got to get out of the market. But I am being selective about what I buy. I'm exiting stocks as they hit their exit points. I'm not saying, oh, look, I'll give them a little bit longer, I'll see what happens. I'm getting out, and I'm not chasing stocks that have run hard. I might be holding a few stocks which have had some strong runs, but I'm not actively going out there and wanting to buy something which has run. And I'm also using those wide trailing stops that I talk about all the time across my positions. So I'm essentially hedging my bets. So if the market goes up, I'm long stocks, and I have been for a while. So I've got some good profits built up. If the market consolidates, well, then I've got those wide trailing stops. So hopefully I can see off the consolidation and stay with what could be a larger developing trend over the course of the year. But if stocks do happen to peak and then fall harder than I'm anticipating, then I've got an exit point. I've got a way out. So I'm prepared for three different scenarios. And the thing is that none of us know what's going to happen. No one. Plenty of people probably tell you they know what's going to happen and they talk with certainty, but really and truly, we know that nobody knows what will happen because none of us can see the future. So it's important that we have a plan for a multitude of scenarios. And if you don't have that robust plan for those scenarios, which we just sort of went through, then that's something I can help with. That's what I do. Come up with these plans. What if the market runs? What if it goes sideways? What if it comes down? It's all about that planning. And most of my holdings currently aren't in ASX 200 stocks. So I'm largely positioned in the emerging companies. And if you watch the latter part of the strategy sessions, if you're a strategy session member, you'd know we've been talking about this over the last few weeks, how there's been this turnaround in the emerging companies index. And I'll come back. I'm going to talk a bit more about this in the actual strategy session. But it's a really interesting chart to be aware of. But unlike the ASX 200, we're still seeing this strong momentum in the emerging companies index. And just going back to the ASX 200, you can see it's really the last 4 or so weeks hasn't been great upside there. Look at the emerging companies, and it's been quite different. I'll just quickly jump into my own portfolio. Just go over to my Self Wealth account. So it's my live Self Wealth account, and so like I said a moment ago, look, I'm bullish and I'm long stocks. Well, there's the current holding. So I'm doing what I say I'm doing. I am actually long the market. So I'm not scurrying to cash because I can see some risk. I'm managing that risk, and managing risk doesn't necessarily mean exiting everything. It just means managing. That's what I'm doing. I have sold some stock during the week. So my cash level in the account has gone up a bit. I've got about 360, I think it is, off platform. So in cash, 360k in cash off platform. So I am still holding a decent amount of cash. But some of that, because as I say, it's about being. I think we've always got to respect risk and be cautious in markets, and that's why I play it anyway. It's not. I'm probably risk averse in the way I play things, and I'm happy to trade smaller stocks, but I want to manage my risk around it. So I've got that cash in the sidelines. I've sold some stocks which have been doing well. I've reinvested part of it, but I've still got that large overall position. So as I say, I'm long the market, but I'm not blindly bullish, and I'm always thinking about the risk. So just looking inside the portfolio, I just order them from highest to lowest, from highest win to largest loss from the open portfolio, and you can see there's been some strong performances. So like, look, you can see underneath 239, 222, 169. And so on. So I think there are 1, 2, 3, 4, 5, 6, 7. There are 7 stocks up 100, up over 100%. There's one on 98. I sold one through the week, which was up 160. So, and many of these, or probably most of them, are in that emerging companies index. So there's a lot of really interesting stuff going on there. And I call these the stocks that most people know pretty much nothing about. You ask the average person, your average investor, what do you know about Acro Limited? And they go, what on earth are you talking about? And so they're all these. Just look down the list. It's not a who's who of well-known stocks, but they're all stocked with market caps of typically over 100 million, maybe $200 million. So they're not tiny companies, but they're emerging companies, which I just find fascinating. And this is a part of the market which has been doing well. So not that there's anything wrong with the ASX 200. There's lots of good stuff to be aware of there too. But if you know where to look, there are a lot of other interesting opportunities within the market than outside those big names. And that's where I think we're seeing some of the performance at the moment. Some of these stocks have had some big runs recently. I'd be hesitant to buy them now. But saying that, I'm also comfortable letting profits run. So while I say I'm hesitant to buy stocks which have run hard, I've got no problem keeping stocks that have run hard in my portfolio, because the thing is, we just never know how far a trend will run. And I don't want to cap my upside by getting out early. Like, I look at a couple of these top performers up over 200%. Had I thought, look, at 50% up or 60% up, they've had a good run, I might take some profits now. Well, had I managed my portfolio like that, I wouldn't have these big gains now. So letting profits run is so important, and that's why I don't want to cap my upside by getting out earlier. As I said, I'll manage risk by using a wide trailing stop. So I do have that exit point should the markets really take a turn. But if they just get a bit messy and move sideways, hopefully those wide trailing stops can see those pullbacks off. And just how this all works out into performance. This is, Self-Wealth's got this feature where you can compare your own portfolio to the ASX 200. Just like I was making that point earlier about the ASX 200 hasn't really done that much over the last 4 or 5 weeks, but the emerging companies index has. You can see just my portfolio kicking up. Maybe I just put that that's on a 1 year comparison. I just put it on a 6 monthly. There you can see that little kick up over the last few weeks compared to the broader market. So it's just about, not saying everyone should be trading emerging companies, but it's if you can track them and you can identify them, the right characteristics to look for, they can certainly add an element to a portfolio which might have a backbone of ASX 200, or may not. Depends what suits you. But look, it is an interesting part of the market, which I think is, as we'll talk about in the strategy session in a minute, I think is well worth being across. Just going back to the ASX 200 quickly. So look, at this stage, I think that overall trend is upwards. I want to maintain exposure to the market as we've been talking about, but I don't think this is a buy anything moment. I think there is some risk. I think we want to be selective. I think we want to manage our risk. And if you do those things, I think that's what keeps you in the game long term, because there's no certainties in this. Yes, the market could really tear higher, but look, I just can't get past this 16% rally without a decent consolidation. The prospect of some chop, I think it's still very much open. So look, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just tells YouTube the right messages, and YouTube goes and shows other people, which helps me a lot. So please do that. And now let's move on to the small laws, commodities, and I've got a couple of stocks to talk about. But of course, that wraps up the free section. So if you're not a strategy session member, link below, click that, come join. Really inexpensive to do. Hopefully you get some good ideas. So, okay.